Here's my little trading strategy I use on the E-minis. I usually trade it on the ES, but sometimes the NQ also. So, the only indicators that I really have on this chart is I use a daily pivot point, because sometimes price likes to, is attracted to that or react to that, and also an 8 EMA, and that's all I use on there. So the first thing I do is, as you can see, I take the extended hours off, because then I can see the actual, here's on Monday, I trade on this day, on Tuesday here. Here was the close on Monday's trading, and then when it reopened on Tuesday, here's that large gap, and I like to trade those gaps, gap fills if you want to call that, and just some quick easy scalping money. So to get the chart like this, all you go is to your settings here, go under futures, and then you can click on this. Is how normally it would look with your extended hours. Let me show you here. So, here's the close of the day, and then you get all the noise in here, and then of course the reopening of the trading day on Tuesday. So I'll take that off, and it's just kind of nice. It's easier to see the gaps, and do a gap fill trading strategy. So I took them off here. So here we go. So here was the close on Monday, and then Tuesday opening, here was the gap. So what I like to do is look, I don't like to usually trade that first candle, because sometimes it can be, it goes crazy up and down, and I usually let that one close the first 15 minutes on my chart here. So this red line here is a touch bracket. So here was the ceiling, and here was the floor. And with touch brackets, the only downfall to it is, let's say I would have taken the trade here, and it went shooting up here, and it hits this, it takes you out of the trade, so you lose whatever the the amount that this was here. I think this area right here was like about $40 or $50 risk if you would take a sell to make $350, which still is really good risk to reward. So what I like to do is let the first candle close, see what it's going to do. It may shoot right down and take that gap, and then you miss the trade, but that's a risk you take, but that's what I was looking for. So this candle came down to yesterday's high, which I put on my charts. Here's like the day before, I look for the high and the low of the day, and then the point of control where the day closed. So candle opened right here, came down, went back up, closed up here. So then when I saw this candle, I was kind of watching it, started going back up, and it was just getting too close to the ceiling of that touch bracket. I didn't like that. But when it closed, I got a nice pin bar here. So what I did was I just entered the trade after the close of that one, let it go, and as you can see, it came down, and then here was like where you're in a trade, you're in money, and all of a sudden it creeps back up, closed here, and then the next candle came down, filled the gap, and when it hit the point of control, I closed out the trade. So I think it was like about $30 or $35 just within, what is that, just a half hour. So that was kind of an easy trade. The second part of my strategy is, I heard this from a trader that does options trading. They put the 8 EMA on, and you have to watch your the way the momentum's going up or down, and like here, for example, as you can see, it started curving. The idea is, if price closes below the EMA, you take a sell, and then let's just say here the day before, when it closed above, you would have took a buy and rolled it up to like probably the pivot point here. So then I got this trade, so then I kind of let it go, kind of came up. I thought, oh, it's going to go back up, came back down here. Next candle did did its thing, and it closed below the 8 EMA. So then what I like to do this one probably wasn't the best, but a lot of times you like to look for that little bit of retrace back into the previous candle, 30% to 50%. This one came back just a tad. I think I had looked at it, I think it was almost like at 23%. And I thought, I'm just taking the trade, and I took the trade, and I wrote it down to this pivot point. As you can see, it popped back up. I waited for the next candle, came down again. I just got out right here, and I figured there it was another like $20 or $30. I think I made like in those two trades around $60. But in hindsight, like you always say in trading, you can't predict the future. But if I would have rode that down, and as you can see, it never actually broke that EMA, and at noon, about noon, you hit that touch bracket, it would have taken you right out of the trade, $350 for a $50 risk. But like I said, hindsight is 20/20. But seeing this, I go, even if it would have came to the trade go to here, I probably would have gotten out. But later on that day, I started looking. I went to the 1 hour, and I looked, and I see, here's that trading day we were in right here. I looked. Look at these huge gaps that have never. This one kind of filled it a little bit that next day, but it never filled this whole thing up. And I thought, I didn't know that. And right here was another one the day before. Look, that was last week, Monday and Tuesday. Knowing that, if I would have saw that, I would have thought, look where this floor is. It's right inside this gap area, plus some good action right here, price action there. I would have probably just let it go and let it drop right to that and made my $350. But hindsight is 20/20. So that is my little trading strategy that I use, and it's been working pretty well. And I hope you like this video. Thanks, guys.